The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to start the show by taking a look at the Dow Jones Industrial Average. And as you can see, if you take a look into Tiger TV, we're looking at a market that topped in around the 24th of May. We came down into the full moon of June 23rd. We made a big ABCD pattern down there, and we've had a really strong rally for the last 14 days. Coming into the new moon of July the 8th, we had combust, which is Mercury conjunct Venus and the Sun, on yesterday, Wednesday. That should be a really strong turning point. Today, the Dow Jones made a higher high by 7 points, and we have Fed coming in today, so that'll have some, wild action no matter what. But we did stop at the exact 786 of the move that we had from May to June. And as long as we don't exceed 15,350, I think that we're still in a downtrend because we do have some lower tops here, which are quite prevalent. And this is true in also the NASDAQ and in the S&P 500 and also in the Russell. So all of them are looking the same. And I know Fed minutes mean quite a bit, but we'll have to wait and see. We did have a request today to take a look at TLT, which is the way of looking at Treasury bonds with an ETF. I don't particularly like ETFs, as most of you know, but this one does have a pretty good idea of following the Treasury bond market pretty nicely. And as you can see, we're completing a big Gartley pattern down at the 61% retracement. Now, the Treasury notes, which are the longer-term paper, they've already made the long-term picture in the interest rate market. I really should bring that up because that's the one that really is the one that controls our interest rates on houses and all the other things that we're looking at. We need to look at that on a really long-term basis because this has been a really beautiful picture of a head and shoulders pattern that we've been watching for quite some time, and we stopped exactly at the 61% retracement on this last move down over 2 weeks ago, and that's when we had the last Fed meeting when the things collapsed. We've had a little bit of a rally from that level, but if you'll take a really close look at this long-term chart on the weekly basis for the notes, you'll see the head and shoulder pattern that was just perfectly symmetrical. In other words, from shoulder to head was a 1.618 expansion, and the head to shoulder was a 61% contraction, and then we came down and stopped at the objective, which was down at the 124 level. So we're within $1, one full point in the Treasury notes, and that should hold regardless of what the Fed does. We should get a rally. Now, the rally will not be very much. I don't believe we'll get more than maybe 30 basis points in the Treasury notes because we've turned the corner in this long-term cycle as near as I can tell. We're at a critical point here, of course, but it really looks like this 32-year cycle that we've been watching for a very, very long time has finally, turned over and come down. There was a possibility at one time that we could have reached 160 in the Treasury bonds, but we only got to 154. And, of course, we're trading in the 133 level right now, and the low we had the other day was at 132 and change. If we go below 131 in the Treasury bonds, you're going to be looking at interest rates spiking very dramatically. How that's going to affect the Federal Reserve, I'm not actually sure, but all I know is that these things look very, very bearish, on a very long-term chart. Short-term, the bonds and notes are due for a rally just because they're oversold and they hit these major support points, but, they can fail. And when they fail, they usually go to a far, far lower level than, we ever expect. Now, I wanted to switch gears here just a little bit and talk briefly about the Japanese stock market. And I'm going to do that via the U.S. dollar versus the Japanese yen, because here again we're looking at that same type of head and shoulders pattern that we had in the Treasury notes. They're very symmetrical, from the shoulder to the high and the high to the shoulder to the head, and the head to the shoulder are very symmetrical, and we hit an exact 786 retracement on the Japanese yen last 2 days ago at the 101.60 level, and we've since dropped a little bit more than a point and a half, which is $1,500, and we've taken out the lows of the last 3 days without very much trouble at all, and that tells us that we could be looking at something more dramatic. Now, what's interesting about this is that if you look at the correlation between the U.S. dollar Japanese yen currency pair versus the correlation between the Nikkei Dow, the correlation is better than 90%. And with the Nikkei Dow, what's happened after we made that high up around the 15,800 level, we broke 20%, and since that time, over the last 3 weeks, since we had the full moon, we had the Japanese stock market rally exactly to the 61% retracement, and this has since started to sell off. So that's telling us that it's doing the same thing that the currency is. And for trading purposes, the Japanese yen versus the U.S. dollar is much easier to trade than the Nikkei, because Nikkei has periods of illiquidity, and it's not nearly as liquid and as volatile as the currency itself, and yet the correlation is very, very high. And so that's the main thing that we're trying to find is a good trading opportunity with terrific liquidity. So that's something that I think we really need to pay very, very close attention to. I wanted to just to highlight the same thing that we talked about with the Dow Jones. I wanted to show the pattern that we're having in the cash S&P index, also going up to the 786. And as long as it doesn't get above 166, I believe that this has just been a really strong short covering rally that you get after a prolonged downtrend like we had through the whole month of May and June. And then we will start another leg down. And whether it's due to the Fed minutes or not, I'm not sure. But all I know is that the numbers that are coming together right now are what they're supposed to be doing. Now, whether they continue or not might have some bearing on what happens with the Federal Reserve's meeting today. But, in fact, I'm not even 100% sure of that. But the good part is nobody else is either, because all we're doing is we're looking at certain things that look like they're going to work, and their probabilities. That's all they are. There's never any certainties that are involved, and that's it. But the question about the bonds on the TLT that the one of our subscribers to Tiger Financial brought out was the fact that it does look more of a buy than a sell. So I would assume that we should get a rally here in TLT and a rally in bonds. We've rallied 1.5 points in bonds off of the bottom, and now we're giving a point of that back. So we're approaching a 61% retracement, and it's very tricky to trade during Fed minute days because of the fact that the news can go back and forth very, very quickly. And if you think that the Federal Reserve doesn't profit off of this, you're being very naive. They have a lot of traders and a lot of these in these 12 central banks that they have around the country that are operating on information that is far superior to anything that we have. In fact, I'm sure they have a little guideline every day of what they're supposed to be buying or selling, and they do control the market. I remember the saying by Thomas Jefferson said, let me control, the supply of money of a country, and you can have the armies, and I will be in control of the country. So as long as you control the money, you're in control of the country, and that's what the Fed does. Unfortunately, the Fed is nothing to do with the U.S. government. It's a private corporation, and it is run supposedly in conjunction with the Treasury, but in fact, I doubt very seriously. The question has come to rise is what's going to happen with Mr. Bernanke when he leaves office in January. Folks, I am sure he has offers that go around the block. people that want to hire him. And it doesn't take much of a rocket science to figure out why, that's for sure. Now, I wanted to switch gears here a little bit. I know Thursday is the commodity show, but we have a market that is really poised to have a terrific rally. It started at least the right way, and that is with the gold market. After we made our low down at the 61% on the weekly basis, down at 1170, we had a $90 per share, with $90 per ounce rally in the gold, and then we pulled back to a 61% retracement, and now we are heading up for another $90 move up into the 1290 level. And I believe that gold is so oversold that it has a chance to have one of the strongest rallies that it's had in a long time, mainly because of the fact that on the long-term weekly basis, and I should put that into the Tiger TV to let you see, where we are. On the long-term weekly basis, gold came down to that 61% retracement, and we could easily have a rally of well over $250 per ounce in the gold market, and it would still be bearish. That would take us up to around, where the market really broke down from, around that 1535 level. But that's very easily that it could do this and still be in a bearish mode. But right now, I think the bias on the gold is to the upside. It's making higher bottoms here over the last 5 or 6 days, which is what you'd like to see. And whether it continues this way, remains to be seen. But I still think it has a really strong place for it to, move on the upside. It's just incredibly, oversold, and still oversold. And we'll see that. Now, I know tomorrow's a commodity show, but we have to focus on something that, people have been watching us for a while, and that is the corn market. We mentioned last week when we were making a 1.27 expansion on the butterfly on the December corn, which is new crop corn, that it was a buy down around that 498 level. We hit that level and went just a tiny bit below it, and now it's rallied well over $1,500 in just a matter of a few days. And this is the fact that we mentioned that, even though it was early July, that we still have probabilities of very strong indications that the crop will have scares from July through when it's harvested in late October. So this is nothing new. I mean, this happens every year. We never go through a crop year where we don't have some type of a scare. Now, I don't think we're going to have a monster bull market like we had last year where the market moved $7,500, but I still think we could have a move where it could move $3,500 or $4,000. So what we're looking for now is to see what this rally is going to complete here in the next couple of days off of the bottom, and then we'll have the pullback, and hopefully that pullback will be somewhere down around the $5 per bushel level. It'll give you a very low-risk entry point where you can become a farmer for about $500, and then we'll see what happens with the crop. We got to take a break. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have a caller in from Las Vegas, Nevada. And are you there, Larry?
Yes, I am, Larry. How are you?
I'm good. It's your easy name for me to remember.
Yes, same for me.
Okay, what can I do for you, my friend?
Well, I have a request and then a question. And
Sure.
My request is, by the way, I really get a lot out of your show. I have a notebook that I keep my notes in when something comes up. That it's very seldom does a person get to tap into the mind of a journeyman like yourself.
I hope the notebook is larger than a postage stamp.
Oh, it's getting bigger.
Okay, good.
My request is, do you think sometime you could put together your top 10 books that every trader should read?
Sure, we could do that right now if you'd like. If I had to, to start all over, from the beginning, I think Reminiscences of a Stock Operator by Edward Lefevre is an excellent book. Of course, the book by Gartley, Profits in the Stock Market, the book by Garrett, Torque Analysis, the three books by Bryce Gilmore, I particularly like my Astro Cycles book has been one of my more popular books, and then also the Trade What You See book. And then Mark Douglas's book, Trading in the Zone, has got to be right there in the top of the thing. Another book that is one of the top books, but it's not related to trading. It's called Light from Many Lamps by Lillian Watson. It's a book about the trials and tribulations of some of the greatest people in history and what they went through. And when you read it, you realize that they've gone through the same thing you've gone through, and how they've handled, some of the horrible things that have happened to them, and yet they've come out on top. And this goes from, way back in ancient history to, Winston Churchill and Franklin Roosevelt, and, just everybody. It's just tremendous of what it does in the trading books. The other book, I like John Hill's book, the Commodity Trading Technical Analysis. It was a paperback written back in the 60s that really covers the old books by George Cole and Wyckoff and Schabacher and some of those things, and that's really a very, very good book. The Lillian Watson book is called Light from Many Lamps, and it's just it's a revelation, is what it is. I've given that book to many people through the years that have gone through deaths in the family, and also through breakups of marriages and kids having problems. But it really is it is a light, is what it really is. But that those are the main ones that I can really think of.
Oh, good.
There's got to be others, but
I have Astro Cycles sitting right in front of me now, and I'm looking forward to your new book.
Yeah, that's really coming along well. Wow! In fact, we're about halfway through, and we've got an incredible software program that's able to bring out the statistics that we want to look at. If we can go back 100 years or more, and actually see the things that are happening, and it's really quite exciting, to see this stuff unfold mathematically, because it's going to be really good. This is going to be a statistical piece of work. I'm very, very proud to be associated with Shane Schmalny on this, and it really is working out quite well. We're using Alfie Lavoie's Air software program, Star Tracks, and it's got everything in it you could possibly ask astrologically. Plus, it has the data, so that you can literally go in and pull out the data of what happened to stocks during those aspects and compare what they're doing, and to give you a probability. And it's just probabilities, Larry. I mean, that's all it is. There's no sure thing, but it looks quite interesting. Yeah,
I'm looking forward to that book. Can you look at Starbucks?
Oh, I don't look at Starbucks very often, because the only time I go there is when my wife Sarah wants yogurt, and because I don't drink much coffee. I have a liquid or a diluted decaf that I bring out over about 3 days and just add water to it, because I'm not a coffee drinker. So I stop at McDonald's, and I look at the culture of Starbucks, and it's amazing. The decaf that I pay $1.07 for at McDonald's runs $3.69 at Starbucks, and I like the McDonald's coffee better. So anyway, looking at the chart, this is a classical top. You can kiss Starbucks goodbye. It's not going to see. Yeah, stay with us, Larry.
Sure.
Could you please stay with us, please?
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back with Larry in Las Vegas, Nevada. Are you still there, Larry?
Sure am.
Okay, we were getting ready to discuss Starbucks, and I had posted into Tiger TV the pattern that we're looking at, which is this 5-wave expanding triangle, and it is got a big ABCD there, and
exactly.
This stock is over. It really looks like it to me. I think this looks like what Apple did when it was at 703. That's what it looks like to me. And we gapped down today. We took out the lows of both Monday and Tuesday. And as long as we don't get above 69.50, this stock looks like it's going to be heading down into the low 50s. That's just my prediction.
Yeah, and actually in the last leg of that ABC pattern, there's also an internal ABC pattern.
Very good. You are reading the book. I like this.
Oh, yeah.
This is terrific. I'll put that in there so the folks can see it. That is that makes the color me happy. That makes me feel really good. Well, they don't always work, but when they do, they work pretty well. That's the bottom line. It's just probabilities. That's all it really is.
mean, the convergence of the ABC, and the 5-point wave, it's almost incredible. But my question to you is, how do you trade the 5-point wave, and what are your price objectives?
Okay, this is we can certainly show the folks in Tiger TV how to do it. The main thing that you want to do is you want to measure each of the waves 1, 2, 3, 4, and 5. But the most important one is the 3 to 4. You want to see what the expansion is going to be, and when the expansion comes in to near like we had at the 1.27 here on the Starbucks, that's where you have to take your take your original position on. And then as far as the price objective, what Gartley said, and I'm going to have to change the scale here a little bit just to show you where your profit objective is, because if you take the distance between 4 and 5, in other words, the difference of wave 4 to 5, I've got to line these up a little bit differently here so you can see it, and then I'm going to put it into Tiger TV. The target will be, and this is where I came up with the number of 50s, because it should go to about 59, but it'll either go to either the 1.27 expansion of the 4-5 swing, or it'll be 1.618 of the 4-5 swing. And if it goes below the 4-5 swing at 1.618, it's going to be like Apple, and it's over. I mean, that stock could go to 20. In fact, if you look at it in a really long-term weekly chart, this stock started back at 6. Oh my goodness, look at this thing, 6 to 60. This stock could easily get back to 30 without any trouble at all. This is this could very easily be a really turning point for Starbucks. Why? I don't know. The longer term ramifications of it, but and believe me, I'm just a technician, Larry. So I could be, if this thing takes off and goes, it's one of those times where the pattern just does not work. But right now it looks very, very ominous.
Can you suggest a good read for the 5-point wave?
Yes, Gartley's book on page it's in between pages 200 and 249. It's called the T6 pattern. In Gartley's book, the T6 means triangle 6. He numbered them 1 through 9, I think, and it was the T6 pattern. It was the one that has the highest probability of working. Wells Wilder, a fellow from the United States who now lives in New Zealand, sold this as a trading system. The 5-point reverse wave is what he called it back in the early 90s for $2,500. He had, I think, 500 people that paid him that, which was like 1.2 million or something like that, and he sold it. And then when he finished selling it, he moved to New Zealand. But it was basically the exact same pattern. I mean, word for word, right out of Gartley's book, and more trading systems have come out of Gartley's book than all the other books combined. And but that pattern does work. It's got a probability of better than 75% working, and it's better than that. It's closer to 85%. But when it fails, it fails big time, and there's not much you can do to make up the difference in it. But right now, it certainly looks like it's got everything, that you need to think that it's going to go down.
Yeah, I'm salivating.
Well, I hope you're short. That's the good thing. If you look at this, I'm going to put a chart here because this is really interesting, because we have this same little doji pattern. I'm going to see if I can draw it in. No, it doesn't work that way. If you'll take a look at this when you get a chance and look at the weekly chart at the high where we are now, and if we finish the week down, we're going to leave a really bad, it's not a shooting star, I forget what they call it, a hanging man, I think it's a hanging man, where you had the high at the top and low at the bottom, and that's exactly what we had at Apple when it was in that $700 range. And then the following Monday, Apple gapped down to 689 or something, and it never looked back. And this could be the same type of pattern that we have going on here. And the other thing is, it's been very quiet up in here. This has been a very, very orderly pattern. There's been no gaps, nothing really fancy. It's just grinded its way up, which is what you would expect. And so this is something that I would be looking at very, very closely.
Yes, that's what I'm going to do. I actually missed a short entry this morning, so I'm going to wait for a retrace.
One way of doing it is if you could get a a put for, say, October, November, at about 60. I imagine it's going to be very, very cheap, and I would get at least several months for it to work because this is a weekly chart. But if you could get a put out there for just a couple of dollars, this stock could easily go to into the 50s into October.
Yeah. Well, thank you for your help, Larry. And
it's my pleasure. And stay away from the casinos, my friend.
This is far better game than the.
Oh yeah, this is true. I had a interesting article that came across my path the other day from a fellow in Las Vegas who writes under the name of Jack Sparrow, and he's a Texas Hold'em player, and he made the comparisons of trading with playing poker. That they're both games of skill, they're both based on money management, they're both based on probabilities, they're both based on the size of your chip stack or your capital, and it's really a terrific article. As a matter of fact, if I can find it, I'm going to share it with everybody at TFNN so they can take a look at it. But it's really a good article. And not only that, but it really shoots down the theory that gambling and speculation are the same thing, because they're not anywhere near the same thing at all.
Yeah, you're absolutely right. Before I go, Larry, I got to tell you, I went on YouTube and I watched a seminar or webinar you did with, I think, Mike the Trader recently.
Oh, yes. Yeah, it was quite a while.
Excellent.
Yeah, sure. I remember that.
Excellent. Boy, it's the best hour and a half I've spent in a long time. It's very good.
Well, thank you. I appreciate the comment. That makes it all worthwhile.
Well, stay healthy, Larry.
Oh, at my age, that's my goal. Every day above ground. Thanks a lot for calling in, Larry.
All right, thank you. Bye.
Okay. I should not have recommended an option because I am not very adept at doing options, and that is probably the understatement of the year. So the next thing I wanted to mention was we were talking a little bit about the stock market, of course, and we talked about gold, but I wanted to show you folks that that we're still having a problem in the silver market. The price of silver is, I know I should be covering this on the Thursday show, but we're going to do more of that. We got a lot to cover tomorrow because of the things that are happening in corn, wheat, and soybeans due to the growing season and the fact that the dollar has been really strong. That affects buying from foreigners, and we'll have to cover some of that tomorrow, and also we'll cover copper and things. But the main thing is that silver is lagging gold very badly. If you get a chance to go into Tiger TV and take a look at the chart where we're looking over the past month on the hourly chart of silver versus the price of gold, and you can see the price of gold has been much stronger for quite some time. And here again, we've already taken out the highs of way back on July the 3rd. And we are still just below the 61% retracement on the silver. So it's telling you how bearish silver really is. Now, that doesn't mean it can't change, and I think that it could, because I believe we got a chance for silver to have a rally that goes along with the gold. But, this remains to be seen if this is going to be, what really happens or not. I had a question regarding the book on astrology that we're writing right now, and it is a book that is going to be an introduction to financial astrology, similar to what I wrote 27 years ago. And the difference is this time we have computers, and we can statistically go back and put these things into tabular form so that you can see the actual percentages of how these things work. And you'll be really surprised at the probabilities of these shorter-term cycles that we're looking at. We're basically looking at lunar cycles, specifically the full moons and new moons, of course, and then the super full moons with apogee and perigee. And then we're looking at the eclipses, of course. and then we will also be looking at the Mercury market, with Mercury and Venus, much like we have yesterday with Mercury conjunct the Sun and Venus, because that's the same type of geometric effect. Is because when you have a full moon, you have the moon on the opposite side of the Earth, so it's reflecting against the Sun, and when you have it on the same side at 0 degrees, that's a new moon. That's why you have the darkness of the moon. That's why the Navy SEALs always attack at the darkness of the moon. That comes out of The Art of War by Sun Tzu. So the other part of the book will be based on Mercury, Venus, and those aspects and how they work, and the statistics are really going to be good. And there's going to be another book behind it. Wiley, the publisher, has already approached us to do another series because the statistics are so they're just really overwhelming. I mean, I knew they were good, but when I look at them, over a long period of time, it's really amazing that people don't really look at this. But I guess they're afraid of the A word, just like they used to be afraid of the F word, which was Fibonacci, and now everybody uses it. So I always said once in my lifetime, before I cash in the final chips, that we will have a program on CNBC or Bloomberg that will be based on financial astrology. It'll probably be put on by MIT or Princeton or somebody from Cambridge or someplace like that. It won't be from somebody in Tucson, Arizona, but they'll see that these numbers that are there do have strong probabilities of making the market turn. Why they do that, that I'm not sure, but nobody else is either. So what we're looking at here is just probabilities on all the things that we're watching at these times. Someone asked a question during the break. They asked a question about the Dow Jones Industrial Average and the Bradley model, and I've posted that several times before. I will try to do it again. I have to do a quick, I think I'm able to do it. Yes, give me a second here, and I can put it up here. And we can take a look at this Bradley model, and you'll be able to see that the overall bearishness extends through November, which is usually the worst time of the year. October. Well, the market usually bottoms in the September-October period of the year, and that's the reason for looking at it. So that's amazing. Oh, one thing that, this is just to show you the statistics behind this quickly. I will show you something quickly from the book that gives you a pretty good idea of what it's going to look like. I mean, this is just a really, let's put it, this is just a glimpse of what really happens with this. I hope this posts okay. Let's just see if it does. It's basically a composite chart of the sun signs and how they go through, the seasons. And what it does is it looks at the market and the probabilities during that time, and it goes over a period of 140 years, giving the statistics. But this is one of the things that shows how to, look at the signs, and we're going to be showing people, the difference between, what it is between a house, a sign of the zodiac, and things like that, so that you're able to differentiate, what these things really are, because they're all numbers, folks. There's nothing to be afraid of, and there's certainly nothing to be afraid of. There's no question. Well, nothing's ever. Your greatest fear is is the unknown, and that you don't ever have to worry about that, because nothing ever happens under the sun that is different than any other time. So the Bradley model is still pointing down. We do have the Fed today. That could have some effect, but I do believe it'll be a short-term effect if that is going to be the case. We've got to take a little break here, and we get back. We want to talk about the Treasury bonds one more time.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And Now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I wanted to end the show with the Treasury bond chart because we had a very significant bottom, I believe, down on July the 7th. That was the day that the Fed did their minutes, I guess, whatever there was. I don't remember exactly, FOMC meeting, but that was the reason for the big drop down. And we had a rally of about 1.5 and now we're in the midst of making a retracement. And I'm expecting this retracement to come somewhere between the 132.23 level, which is the 61% retracement of that low of July 7th, and the 132.13. Now, that's a difference of $500. So the best way to do this, it's going to be very, very crazy when the Fed acts, because people act very, very emotionally over these reports, as we all know, whether it's non-farm payroll, Fed minutes, FOMC. That's the function of CNBC and also of Bloomberg to see this. But we'll be watching. I'm going to be looking to try to buy the bond somewhere between the 618 and the 786. But if there's a wide bar there, I'll probably wait a little bit just to make sure that the low at the 132 level holds. And if that doesn't hold, then we're looking at something far, far sinister. On a comical note, I have to make a comment about Bloomberg today. The fact that they had, actually CNBC had Elliot Spitzer on today, and he is running for New York Controller. And as most of you know, he was involved in a scandal when he was Attorney General. But he's making one of the greatest comebacks of all time. I guess the next one will be Lenny Dykstra, or O.J. Simpson will probably be coming back into the limelight one more time. But we'll see how well it works out political. The things that you see on CNBC and also Bloomberg, sometimes you have to take them with a grain of salt, because it's really comical, some of the things they tried to feed us. I mean, you can you can only disguise tapioca in so many different ways, folks. But it's really amazing to see him make a comeback after the things that he went through. And but that's it. That's politics. That's the way it goes. In fact, I think we had a president a few years back that had some problems, and yet he's still very, very popular, and he's on TV just like nothing ever happened. And yet, it certainly did. But, that's not me to figure that out. Anyway, the main thing to watch today is how the Fed meeting is going to go and how it's going to correct the bonds here, because we should get at least a 4-point rally or 5-point rally. We've came a point and a half out already. And if this lows hold between the 132 level, then we have a pretty good chance for the bonds to, get somewhere into the 135, 137 level. And we'll be looking to sell them short, because longer-term interest rates are going higher. There's no question about it. If you look at the long-term charts, that head and shoulders pattern is broken down badly. We're in the midst of the first rally off of that head and shoulders, and that tells us it's pretty bad. The Nikkei looks like it's topped. We haven't shown a top yet in the U.S. markets, but we're very, very close. Combust usually works pretty well. And we're also, 2 days past the full moon, the new moon, and that should also kick in here pretty soon. But again, it's only probabilities. It's never a certainty. So that's the main thing that you're trying to look at here. On tomorrow's show, we're going to be focusing on the commodities, of course, with wheat, corn, soybeans, copper. We will be looking at platinum and palladium and some other things. So live every day in an attitude of gratitude, and may God bless.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.